everyone, and welcome out to your Maverick Currencies midweek for June 8th, 2022. Corey here with you. As always, just a quick reminder to make sure that you follow your trading plan. My voice might sound a little different. I might cough a few times. We are getting hit with COVID in my house. Um, my two youngest daughters have it. I have it. So anyway, we're battling it out, but I actually feel fine, probably sound a little different than usual. So let's get into it. This week's review, we've got some things happening in the FX markets, which, there's correlations, of course, and oil prices spiking is having an impact on the Canadian dollar. And the Canadian dollar is the best performing currency and looks strong, looks healthy. So let's go through this and make sense of it together. Markets are sideways over the past couple of weeks. That's pretty impressive given the bad news. If you think about all the things that have hit the market recently, um, corporate earnings, Target, Walmart, Snapchat, all these different companies coming out and saying it's a tough environment. We've got big problems and so on, and yet the market's kind of grinding higher. It speaks to that there is an underlying bid, there is an underlying strength. Now, we knew 2022 was going to be a tough one. We've gone from the Fed is, at a wind at our back to push equities and risk assets higher to now it's a wind in our face, right? And we have to deal with that. And they're removing liquidity, and these things take time. And a lot of times a bear market will last 1 to 2 years. So we're relatively young in this potential bear market. It just, 6 months in, basically. So 6 months, average bear market's about 3 times that, about a year and a half in duration. So we probably have a little bit more to go before this thing's all said and done, big picture. US dollar, we talked about how it kind of had a lot of the expectations that we expected and that we were playing for. Now it's kind of pulled back, and we'll look at that chart. It's kind of in that mode where it could be creating a big cup and handle type of pattern for a potential long-term breakout to the upside. We'll look at that and make sense of it together. Energy has just been incredible, right? And energy stocks just kept booming and booming, and oil prices keep booming. It's the one trade, I've trusted it. We talked about this a month or two ago that these two commodities diverged. Gold went down and oil stayed up, and it was just a good market tell that, hey, there's just an underlying bid and a lot of strength in that energy market. So as we look at this week's performance, you can see that most everything's positive except for crypto, but oil is definitely the standout so far. Now, I'm going to say something that sounds a little dicey probably, but I think oil and energy is actually reaching a little bit of a short-term high. Usually when there's this much attention being paid and people are really clamoring and the public's really getting involved and saying, oh, we got to buy oil and it's going to go up forever, that tends to be the late stages. Now, I said the same thing a week or so ago, and it actually turned down, and now it's gone even a little bit higher. So that's the thing about quote unquote calling a top, is you don't really think that you're calling the top or the bottom. It's more of an area. It's kind of a zone. And I think that's where oil is at, is it's kind of in that topping out process where I don't know if it's the 8th or the 9th inning, but basically, again, the majority of people are now catching wind of this. Well, listen, energy stocks are already up like 60, 70% year to date as a sector. That's where you kind of say, okay, let's use these big bursts to the upside, like happened yesterday, to probably take some money off the table. That's usually how you get exhausted and you have some corrections and consolidations and so forth. Now, having said that, I actually think that going forward, we could look to rotate back to gold. I've had it on this midweek for a number of times talking about, hey, expect more downside in gold and more upside in oil. I really want to flip that here over the next few weeks, and I would anticipate that we're going to see gold vastly outperform the energy markets and oil and so forth. Now, again, the timing on that is the tricky part. I don't know if it's ready today for sure, but that's kind of the outlook that I would have. As you look at currencies, the Japanese yen with the breakdown, the Canadian dollar with the move up, and those are the two strongest. And then crypto down for the most part. What is this? Cardano actually had a big spike upward, but a little bit of an outlier and bear market rally in that particular name. As we look at the markets, there's good and bad news. The good news is we've had a nice strong bounce. The bad news is you're going up into a declining 50-period moving average, and if you were to slap Bollinger Bands on this, you haven't hit the upper band, but you're pretty darn close, which kind of speaks to the price pattern. You're in a bear rally, you're getting towards the top end of the range, and usually you're going to struggle in that type of picture, in that element. So, and the anticipation for me is we've wanted to be buyers here recently. We've wanted to kind of play the market for a bounce. It's done that. I don't know that, again, I doesn't have to move down today and tomorrow, but overall, I think you've got to take some money off the table if you were playing it for a bounce, lock in some of those profits, and I would anticipate it's going to get bumpy here again for the foreseeable future. As we look at the dollar index, this big resistance at 104, I didn't draw that line very well. Let me try again. If we draw it a little cleaner, that line is higher up here at 104. But basically you had kind of that one-day pop through that we had talked about in anticipation of it, and then kind of the pop and drop scenario, right, where it sucked people in, trigger some stops, but then fall back. Now what do we have? Well, here you should be kind of creating a big cup and handle type of dynamic. The cup and handle prices out to about a push down to around 100. So if you really create that handle, it could go as low as 100 here and still be intact for more upside. And I would anticipate that that's the case. I think we kind of correct a little bit further here in the US dollar. Probably trade a little lower here for the coming weeks. And then the dollar might be a great buying opportunity thereafter. But speaking of a little more dollar weakness, I think, again, this is where we could take advantage of maybe rebuying into gold, playing it for a bounce as a currency play or as a commodity play. As you look at various currencies, CAD outperforming, but not far behind was the British pound. The euro's trading pretty well. As obviously, there's one outlier here on the downside, and that's the Japanese yen. Swiss franc not so good either, but definitely led lower there. Like we said, in crypto land, they all kind of had these big consolidations. Certainly looks like the next leg is going to be a breakdown. That would, it's about 70% of the time, if you come from a downtrend and then you build a big base, you're probably going to break lower about 7 times out of 10. So there could be something that changes that. Maybe there's some surprise situation that causes the market in crypto to catch a big bid. We have to wait a little bit because they're just not moving and they're not breaking either way, but the anticipation would be that there's another push to the downside. That would be the likely outcome. So let's look at a few things here as we dive in. Mixed bag in the market. You're now above the 20, which is bullish. You're below the 50, which is bearish. And the slope on these is starting to go sideways and change. 20 curling up, 50 still sloping downward. So you've got one neutral, you got one bearish and you got one bullish, that's pretty much a 0 rating. There's not a real clear picture. My thought is again that this is a short-term bounce that was tradable, but we're going to resume the downward phase here, and it's probably coming in the not too distant future. So buckle your seatbelts. Another bout of volatility is probably on the way. Now, as we look at other markets and possible ideas for trading, it's pretty much the same picture across the board. Whether you're looking at, whoops, why is that frozen up here? There we go. Whether you're looking at international stocks, same picture. Up against that declining 50-period MA, and probably going to kind of fail here and get a little bit more selling pressure to follow. In terms of expectations, another leg to the downside. Crypto, here's that consolidation. I would say, again, majority of the time when you create a low base, you're going to break out of that to the downside. That we came from a downtrend, we're probably leaving for another downward trend. You can see the exhaustion. See how important exhaustion signals are, where it just kind of told you that was the end of the downturn. What it didn't suggest was that we would have to go sharply higher. In fact, most of the time, after you get an exhaustion signal, you go sideways. So when you get an exhaustion signal, what it's best at doing is as a take profit signal, not to flip-flop and not to take the other side. If you bought crypto there, you're probably disappointed. But if you took profits on your shorts, you're pretty happy with that signal. So that's kind of how it works, is as a take profit dynamic. For this week, we've got the ECB meeting, and we'll be trading this live on Thursday morning, tomorrow morning. Expectations. So we're starting to see some rate hikes, and we're starting to see hikes that are a little more than expected. On Monday evening, the RBA came out with a larger than expected rate hike. We had a little bit of technical difficulty, by the way, on that, so I had to restart the class. And but anyway, most of you, I think, were able to get into that, even though there were some that were, when we started the class, apparently GoToWebinar didn't let everyone in, so I shut it down and then restarted, and people jumped in. But anyway, they raised by more than expected. They hiked rates. The expectation was to go to 60 basis points, and they went to like 80, 85. I don't remember the exact number, but anyway, a bigger boost than expected. Could some surprise come out of the ECB? It could. If it's going to have a surprise, it's probably going to be hawkish. It's probably going to be more hikes than not. Again, that's the environment. That's where we're at on this. So just understand that central banks are now on the other side of the trade. They're basically went from not being fearful of inflation at all to being scared to death and trying to do anything to keep it at bay. We get employment out of Canada on Friday morning, and the always important CPI data out of the US. Now, expectations are for an uptick in CPI going from 0.3 month over month to 0.7. Anything that is lower than that, the market would probably cheer. The market is looking for inflation to calm and to try and see signs of that. Surprising enough, I think inflation has peaked. I think what we saw there at our 8 to 9% inflation was the tippy top. The problem is, and I've said this, is we're still at a high inflation even if that was the peak, right? Because as you go to 7%, 6%, well, that's still 3 times what the Fed wants. So it's not that inflation is going to plummet. It's that inflation has peaked, but it's still high compared to where they want it to be. And it's still pretty sticky. It's the type of inflation that's just not going to go back to 2% in a hurry. If we get back there, it's going to take some time, and it's going to have to work its way there. But markets will be watching that. So certainly Friday, expect some volatility on that news. Let's take a look at some possible trades. So here's kind of the way I broke things down. I have the Japanese yen as tradable on the downside, and the Canadian dollar is tradable on the long side. And then we have some others that I would call certainly close and watch list candidates. If you kind of look at this from the standpoint of things that are close, the euro is more bullish than not. The Australian dollar is more bullish than not. On the flip side, on the bearish side, Litecoin is a little worse than most. And we're getting a little more weakness out of the Swiss franc. It's not there yet by any means, but a little more weakness. I also think, like we talked about, the US dollar, I think there's another wave of selling that's going to come into the dollar before that thing's all said and done. I think it kind of creates that big cup and handle, which means we should have another couple of weeks of lower US dollar trade. So if I were grading it, I'd say, well, Japanese yen is the obvious bear and Canadian dollar is the obvious bull. But let's add US dollar here, and let's add Swiss franc a little bit more on this side. As possibilities, Australian dollar on this side, and you could go euro on this side. A little bit more bullish, a little bit more bearish. I feel less confident on this and less confident on that than I kind of do the others, I suppose. So if we were looking at it from personal outlook and expectations, that's kind of where I fall. Now, let's come over here and take a look at a few charts. I see a couple of requests, which is awesome. Let's get to those first and look at a few things here. So here's the daily chart of the Japanese yen, and need to spread this out, drag this down, and so forth. For some reason, that's not resizing the way I want. See if we can make this thing work. Well, I'm not sure why that chart is looking so weird, but essentially you can see the deterioration in the chart. You can see that the Japanese yen has been on, quite the heater on the downside, if you will. That's a 4-hour chart. That's the 1-hour chart. I mean, it's pretty dang, it's got some momentum there. Let me do this. Let's go flip our chart. Let's go back to trend and velocity here, and this will show it a little bit better. But there you can kind of see. I mean, look, we're breaking down once again, and it really started right back here. This is the resumption. Now, I felt pretty strongly that yen was kind of in an exhaustion back here. We could spread this out a little bit further, and you can see kind of the exhaustion right here, and it went sideways for quite some time, had a correction and such. Now this is the resumption of that, and right in here is where it started to renew. So how do we play this? Well, you're probably getting to a point where it's going to bounce for 1, maybe 2 days, but that's just likely to be another short. It would be lovely if it just kind of bounced right up underneath that low, and any little bounce into that zone, I would expect further declines. So as we look at the Japanese yen, clearly the weakest currency right now from a trading perspective, and it has trend and momentum. And I don't necessarily think you have to wait for a big bounce. Use bounces, use any opportunity to kind of look to get short that. Now, if we come into the Canadian dollar, has a little different feel to it on the opposite side. What do you see? Well, for as good as the yen is as a bearish candidate, the CAD is pretty darn good as a bullish candidate. Trend is intact. Momentum is strong. The breakout itself happened a couple of days ago, but ultimately should continue to work its way higher. Let's look at a couple of pairs that were requested. So, Aussie Kiwi. So Aussie Kiwi was actually what we traded. Where's my pairing here? Am I just overlooking it? Oh, there it is. Okay, we traded this on Monday night, and better lucky than good is probably a good way to describe this. If you look at the trade itself, the reason I say that, let's come all the way back in here a ways, but if you kind of look at this, well, it'll show it on the daily that you kind of broke higher. If you go back, we were using the 1 hour chart. If you look at this surge up on the actual RBA statement, we played the price overlap strategy, which is basically, okay, you have this huge candlestick. The expectation is that if it comes back, if you break this into 4 parts, right? This is the bottom 25th percentile, that's the second, that's the third, and that's the top 25 percentile. We try to buy right in this area here of the second percent, that 50%-ish type of retracement, and we call it price overlap. I've never heard anybody else use that term. I made it up. Maybe, I don't know, maybe I heard it somewhere, but I kind of made up this concept of, look, it's huge candle, you usually get a little price overlap, and that's the buying opportunity. So we look to buy this, and we said 2 different approaches. One, you can just play it back up to the high and take some money off. So check on that. You've probably taken profits on half. The other half, you could still be in and have tightened up the stop and so forth. The reason I say better lucky than good is why. It's the only chart in the Aussie pairs that held up. So the only, like, our thesis that I had for the RBA was kind of the wrong thesis. My thesis was, hey, this is a pretty solid energy breakout. And specifically on Aussie Kiwi, you can see, look at the daily, it was breaking out above this resistance and such. I said, man, it looks to me like it's just going to keep going. So it looks solid. Let's buy in. Well, I felt like the Aussie was going to hold those gains for a trade. We picked the one pair where it worked. And that's probably more, I mean, we can be given credit for knowing that the Kiwi was bad, and it really is the solution and the savior to that trade. But if we had traded anything else, it would have been the wrong trade. If you look at, Aussie Yen, it gave back the gains. Or you look at, well, Aussie Yen might have worked as well by a thread if it did. But if we look at these other Aussie pairs, whoops, I'm going the wrong way. If you look at Aussie USD, you'd have been stopped out. If you look at the Aussie versus the Swiss franc, it would have stopped you out, against the pound, it would have stopped you out, and so on. So we kind of just picked the right pair with that particular name. So if you're still in that from the RBA, I think you got to, again, raise the stops, lock in those profits, but it's a good trade. You've already got some money in your pocket and you've got a winner. It might become a great trade if that thing keeps going and going here for a while. You might hang on to half of that and really see some growth. Let's look at Euro Swiss franc. This was requested. So that's a pairing that usually has a little bit more positive correlation, meaning that they trade together, right? Euro goes up a little bit, Swiss franc goes up. Right now, we're seeing a little bit of a divergence. Euro stronger, Swiss franc weaker. How do you trade it? Well, let's make sense of this together to a certain extent. I would kind of look at it as we know where resistance is, and it's coming into that at 105, the figure. My guess is that you get a little pullback, which is your opportunity. Here's how I would trade it. I would basically measure this thing out. The resistance is at 105. The bottom of that cup here is about 102. We can be a little bit more precise. That low is at about 102. 102.20 or so. So the size of that cup is about 280 pips. You know, that's about the distance of it. So at 280 pips, how big should the handle be when we pull back off of this 105 level? Well, usually the handle is about 30% of the size of the cup. So if the cup is 280, the handle is going to be about 30% of that, or about 84 pips would be 30%. So if you back off of 105, you're probably going to go down about 0.0084 below that level, which would put us at about 1.05 minus 0.0084, puts us at 104.16. So that's how I would be looking at it, is saying, okay, you know, here's kind of how I would be looking at trading Euro Swiss franc. I hope that, you know, makes sense, but right around that level, and let me make sure I did that right, 1.0500 minus 0.0084 puts us at, yeah, 1.0416. So we're at 1.0471. You probably got another 50, 60 pips lower, which should be pretty standard. Like if you pull up, let's go to a different time frame. If you come in here to the 4 hour, if you get down there towards 104.16, it's about the retest of the breakout right there, which would be, you know, picturesque. 104.16, it's right in there. Okay. If we come into the 1 hour, 104.16 is right in here. Let's get my cursor on it, something like that. And again, that's kind of right where you broke out. And it should probably pull back and kind of retest that zone. So I like it as a pairing, and I like it right around there. So I hope that's helpful, Eddie. William asks, Aussie Yen. So as far as a target, an expectation here, let's go on the daily. I mean, realistically, this could go for a while. This could be pretty significant. You broke out above that resistance. I mean, it could go for quite some time. 12 hour, 4 hour. I mean, they're all bullish. They're all in an uptrend. So, boy, I don't know. It's almost your wildest imagination is about how far this thing can go, to be honest, because if we were looking at it, you could do a measured move, but that's a pretty wild target. But if you measured the size of this base and you said we could do about that same size the other way, I mean, it's a lot higher. You're at 96 and you're probably targeting 100 or thereabouts, right? Maybe even a little higher than that. So it's considerably higher, hundreds of pips higher is really big picture where that could go. Now, it won't go there in a straight line, right? How's it going to get there? Well, there's going to be some chop to it. There's going to be some pullbacks, and there's going to be some consolidations. But ultimately, certainly seems like that's the path of least resistance. So if this is a good breakout, which I would give it credit for being until it proves otherwise, you're really likely to go considerably higher. And that Aussie Yen is not unlike, a lot of other pairings against the yen. Here's CAD Yen, which broke out earlier, but just look at it. I mean, look at how it's accelerating. And if we were to use the measured move approach back here, you'd say, okay, it was 102.50 to 97.50. It's about 5. So that puts us at 107.50, or about 5 points higher than the 102.50 breakout. Heck, you're pretty dang close to hitting that, right? So the size of this was 5 points difference. That's the size of the base. That's about how far you'll go up in space. And 107.50 is right there, which we probably already touched. What did that touch here? Not quite. It went up to about 107.20. But ultimately, you can see how that breakout was strong. And their Aussie Yen is kind of like that in that it's broken out, and there could be quite a bit of upside here possible. So good stuff. All right, so those are some of the trades that we were kind of looking at in terms of the bullish and bearish list. CAD, obvious on the bullish side. Aussie looks solid. Euro, one to consider. Yen on the bearish side, I'd start to relook at US dollar shorts, shorting the USD, and then the Swiss franc as well could be considered on that. Now, for the rest of this week, we have the ECB meeting, which we will trade live on Thursday. The CPI comes out Friday. Be aware of that Friday morning. That's going to be a market mover. If you're trading, just have that one, in your sights as well. That's going to be a pretty big event. Right now, inflation numbers are certainly market movers. And then, as always, we'll get the weekend trading room sent out to you. Thanks, everyone, for being here. Thank you for the well wishes. Yeah, we're battling a bit of a cough and whatnot, but quick recovery is on the way, I'm sure. Thanks again. We'll see you next time.